If you're fortunate enough to find yourself here this morning, count yourself so lucky. If you're fortunate to find yourself here this morning, count yourself so lucky, because this morning, whatever we are going to do, I presume or I assume that you are a trader who needs more knowledge about trading, and such trading we entitled to be an advanced knowledge in crypto trading. Advanced knowledge in what? In crypto trading, right? So this one, get prepared, be guided, and whatever we couldn't discuss last Monday, this morning we may present most of them here, because this session happens to be an advanced session, which is going to ensure that it's going to throw more light on a lot of things that you need to know. It's going to present to you more detailed knowledge about trading, right? So both the right, the left, the middle, the west, the east, the south, the north of trading, we may not be able to present everything, but we may be able to present most of the insightful or meaningful knowledge that you deserve to know so far as trading is concerned, right? So take your pen, your notebook, or your paper. In fact, you don't need paper because you may throw it away. So get notebook and then pen. So that sit up and let's all start this journey together, right? I guess you are prepared and you are ready to follow. So if you are ready to follow this morning session and ready to learn, give me one in the chat. If you're ready to follow this morning session and ready to learn as well, give me one in the chat. I also share my screen. As I also share my screen, if you're already prepared and ready to learn, give me one in the chat as I also share my screen. As I share my screen. Good. All right. Very good. So I can see 3 people are well prepared this morning. 4 people are well prepared to learn with me this morning. Right? Out of the 54 people here, I can see 4 people are well prepared to learn with me this morning. Is that so? That's so. I'm kidding. Is that so? Because I can see only 4 people here who are giving me one, indicating that they are well prepared to learn with me this morning. Where are the rest? Is that so? All right, that is okay. That is okay. That is okay. All right, so let's proceed. My screen is visible and I believe you can see. My screen is visible and I believe you can see, right? I believe you can see my screen. I believe you can see my screen, right? So we are going to talk about trading. And fortunate for those who um I've been able to watch the last Monday session what we discussed about futures trading and sports trading. We intend today we may go advanced, and we are still talking about the sports and then also futures trading. And when it comes to trading, what I've been saying is that trading entails a lot. Okay, trading in itself, or when it comes to crypto, crypto in itself requires an unending knowledge, unending knowledge, right? Which in pursuance of it, you must be dedicated and willing to learn all the time. Which in pursuance of it, you must be dedicated and willing to learn all the time. But most important, mostly, what I've come to realize is that our greatest challenge in the industry is that we have a lot of people who are willing to make money, but they are not willing to learn. We have a lot of people who are willing to make money and they are not willing to learn, which is so bad. And this morning, my meditated prayer, what I meditated on before praying, and I was preparing a very nice sermon. And the sermon that I was preparing, I was conscious enough. I was like, okay, becoming the example you want to lead. Okay, becoming the example you want to follow. Right? Sorry, this is just by the way, but I want you to understand something when it comes to our progress in trading, right? Becoming the example you want to follow. So you want to be a leader, or you want to make more money, and yet the necessary things that you are supposed to do, you are not willing to do them. So becoming the example you want to follow, You want to see $1 million in your account, you want to see $10,000 in your account, you want to see $100, you want to be making $10 a day. You want to avoid liquidation, you want to understand trading, but yet you find yourself on an interesting platform where people and leaders are so dedicated in teaching you, and you don't want to be a good follower. So this is what mostly I've been talking about on the platform, and a lot of people don't understand. They will be like, hey, I cannot join the meetings all the time. I don't have time. I'm busy. If I'm busy, why do you want to make money? Hmm? Hmm? If you're busy, why do you want to make money? Because money is not meant for people who don't want to understand the rule of making money, who don't want to follow the process, right? So you are trying to be a bad follower. And when it happens, so you just make the work to be so stressful for the leaders. Right? So sometimes not because leaders are too bad, because the followers are too bad. Because you are not willing to be the example you want to follow. You are not willing to be the example you want to do, or you want to follow. So you make everything to be so bad. So just be a good follower. If you are not willing to be a leader, then be a good follower. Follow the process. Join the meetings. Learn. Progress. Improve. Make more money. Produce results. Here you are. Join meeting. How many people are here? How many people? How many people do you find ourselves here this morning? 75 people. 75. Right? So go and look at the number of people on the platform. 75 people find themselves being here this morning. Where are the rest? Right? So we talk about it. You say, oh, brother Emma, he likes talking too much. Do you think I like talking? I've not started trading this morning. And maybe if I intend to trade today, maybe I'll trade. Maybe if I decide to trade today, maybe a single shoot or 2 or 3 shoots may give me something good. So why worry myself get you here this morning? It's because your well-being also matters. I think about you, and all leaders do think about you. That's the reason why they waste their precious time to be with you. So you need to value that presence of such leaders, right? So one key reason, never miss meeting, right? One key reason, never miss meeting. And if you want to progress, you should always inculcate the habit of joining the meetings all the time. And that is what is going to help you. So when it comes to trading, especially if you want to progress, you need to learn how to go on advance, right? You need to learn how to go on what advance. And the easiest way you can do that is by being a good follower, right? So this morning we discussed about trading, advanced knowledge in crypto trading, right? Now, over here, we are fortunate enough to discuss about the sports and then the futures. Sports trading and then also futures trading. In both parts of the market, you must understand what it means to say go on advance on sports, go on advance on futures. And going on advance simply means understanding the deepest parts of the market. Understanding the deepest part of the market and making solid decisions based on these deepest parts, right? So someone may be asking, that spot auto trading involves going at advance? Yes. So when we say you are going on advance, that is learning. So Chito, stop writing. Okay, Chito, MS. I can see you are using my board. So stop using my board. It's for me alone. All right. So going on advance simply means understanding the deepest part of the market and being able to make solid decisions based on these deepest parts. And that's the reason why a great man once said something. He said, the money you make is as a result of the knowledge you have, right? So go on advance. That's the reason why I still like the book called Go Pro. Not necessarily because I like the book itself. I love the book. It's good. But then I love to always go pro. Learn to go pro in everything. Even if you are a thief, go pro in thieving. Should I say thieving? Right? So learn to go pro, and that is advanced. So for other man to say pro, the other one will say advanced. Learn to go advanced in knowledge on whatever skills that you have, right? So when it comes to sports trading, as a trader, you must understand the advanced part of the sport market. And the advanced part of the market, especially on sport markets, it's mostly about the asset to trade, right? The advanced part of the spot market is mostly about the assets to trade, about understanding the different classes of assets. And those assets that can help you, those assets that even if you jump your money, you invest your money on them, you wouldn't end up getting into non-existent floating loss, right? That is the reason why, you see, if we're a beginner in crypto, you end up buying certain coins, and at the point in time you realize that, had I known. Why do people say had I known? It's because they never knew, and they followed what we called influential people. The people influenced them because they wanted the hype. They followed the hype, and they bought the hype, and now they ended up being at the part of the dip. The last part of it, that coin, sometimes you don't even know either it will get a passion to rise again. You don't even know. It's because you refuse to go on advance, and refusing to go on advance, you listen to other people, and you were asked to buy the hype. You bought the hype. Now they use that hype to make money, and here lies the case. That coin is a dirty coin, and this thing has been happening in crypto for many years, for decades, right? It has been happening for many years now. It's because people refuse to go on advance. It's because people refuse to go on advance. So in every part of the market, if you really want to flourish, if you want to sustain, go on advance. Now, there is nothing wrong with being a beginner, but there is everything wrong with maintaining yourself as a beginner, right? There is nothing wrong with being a beginner trader, but everything is wrong is maintaining yourself as a beginner and refusing to go on advance. Understanding the deepest part of the market, the deepest part ways of making good decisions in the market. So, as a trader, when it comes to spot trading, one of the best ways you can provide and you also improve yourself with good signals is by learning to understand that not all coins are supposed to be traded. So, if you take Royal Kill as an example, maybe you go on the app, you see a lot of assets there. You need to ask yourself, must I trade on all these assets? Are all these assets even meant for me? Yes, that is when you begin to learn to know that some of the assets are there, maybe, you see, not for you. If everyone will trade that assets, not you, because you are going on advance. So you prefer some of the assets more than some of the assets. Why? Because you exactly know what you are doing, right? So when it comes to crypto, for instance, on the spot market, like you've been saying, um, now I was searching for some. I saw a platform this morning, and they were just luring the people. They said you trade in a particular exchange. So I intentionally came to CoinMarketCap to search for the name of the exchange to see if I will see that exchange on CoinMarketCap. Since most of the exchanges can be found on CoinMarketCap, I came to CoinMarketCap on exchanges. Then I typed the name of the exchange. It wasn't on CoinMarketCap. So I intentionally chatted the admin. I was like, hey bro, what are you talking about? But that exchange is not on CoinMarketCap. He said, yes, yes, yes. I know it's on a CoinMarketCap. I was like, wow. So you people are scamming people again. That was the thing I told the person. You see, it's because people refuse to go on advance, right? So if you want to be a good trader on the spot market, the first thing you are supposed to think of is assets, the class of asset to trade, the class of assets to trade. Because you are not supposed to trade on every asset because you see it's pumping. There are some of you, anytime you log into your Binance or you go into your exchange, you see an asset pumping, maybe doing 20x. or even 100x, then you feel like, oh, how I wish I would have traded on this particular asset. You have missed the rule of the game. Why? Because you just want to be jumping on every asset, all in the name of making money. That is not how we make money. Making money must also have a rule, right? Making money must also have a rule. And one of the rule is going on advance on money. So people make desperate decisions for money just because they want to make money. That is not how it's supposed to be. The advance on making money too. You're making your financial decisions must be broad. You must advance it. So when it comes to crypto, for instance, on the when it comes to sports trading, right? On sports trading, we are so focused that if you want to make good profits on the spot market, some prefer to go on memes. But then, if you want to also think about security, then you must also think of the good asset to trade. And when you come on CoinMarketCap, some of the questions that I've seen people asking, what are some of the best assets to trade? The best assets may depend on classes, okay, or sorry, on the category of assets. And mostly I've been talking about some of the assets like made in US coins, even though not all made in US coins, and then also chain coins, right? So I talk about basically two classes of assets, um, real world assets, then also um, chain coins, and then made in USA or America coins. You may choose to call them America coins. Now, they all appear to be sometimes the same. Some of the reward assets are American coins, and then also there are also chain coins as well. And these classes of coins, I don't joke with them. Why? Because gather specific assets within these categories, they help the traders in terms of few security. That is the first thing. In terms of what security. So if you are the type you want to think of asset to trade, then the first asset you have to think of is getting real world assets. And let's take our time to read what we mean by real world assets, right? So let me know. I guess I'm just going without looking back. Let me know if my audience are following. Are you following? Are you following? Are you following? Exactly. Are you following? Very good. Very good. All right. Then let's proceed. Let's proceed. So when you come to coin market cap as an example, even though some of these sessions we will talk about them in what we called in technical analysis, fundamental analysis, but then this is another session on its own, right? So on your coin market cap, when you have the app, once you have the app, just scroll back. We have the categories. On categories, you may scroll through. This is real world assets, okay? Real world assets. Let's look at what real world assets purposely mean and what they serve. This is real world assets. Or okay, very good. So let's tap on it. Good. So when you come to real world assets, most of these assets find themselves also to be in the category of chain coins, and you can see the first 70, or sorry, as you can see in order. For instance, you have Link, XLM, Avax, HBAR, Undo, Algo, Sky. Now, you take your time to ask ChatGTP or any of your inquiry information that what is real world assets, right? What is actually real world assets? You take your time to learn to ask ChatGTP or any of source, any way that you can source for good information from digital space. You ask about what real world asset is all about, right? To know more about what real world asset. So let me see. So let me share this on the is it the link? Oh no. So The first thing that you have to do is to take your time to get to real world assets. I wanted to share it on the platform, but then it seems to share the link. So I have to stop. Right. So just let's go to any of our, let me see, either Chrome or you use ChatGPT, right? So ask ChatGPT, what are reward assets? Mind you, you are doing this yourself. What are reward assets in cryptocurrency? Hmm? Okay. So reward assets in crypto refers to physical or traditional financial assets that are tokenized and brought into a blockchain. In simple terms, they are real things like real estate, gold, stocks, treasury bonds, even invoices that are presented by digital tokens on blockchain, so people can own, trade, or use them in decentralized finance, that is DeFi, right? So in basically, when it comes to real world assets, these assets are mostly needed in our real time, okay, daily life. So for instance, in the use of real estate, gold, stocks, in the real time market, all these assets like real estate, gold and stocks, treasury bonds, they are all useful in the real time market, right? So they've tokenized all these assets and transformed them on the digital space so that people can also trade on them. So in as much as people cannot get access to real estate, gold, stocks directly on the real market, they will be able to trade on them on the digital space, right? So it simply means when it comes to real world assets, they are always in use. Hmm? They are always in what? In use effectively, and they serve effective purpose on the market. So people would love to trade on real world assets predominantly as compared to maybe other assets, because they serve huge purposes in the digital space, right? So you scroll down, you see, imagine 10,000, 100,000 house. In the traditional world, you need paperwork, agents, and weeks to buy or sell it. In the crypto world, the house could be tokenized, divided into, say, 100,000 token worth $1 each. Now, anyone can buy a fraction of the house. One token equals $1 share of the ownership. Trade it or use it as collateral in DeFi. So these are purposes that it serve in the what that reward assets serve in the digital space, which makes it so easy for other people to do or to use them. So if you are in the crypto space and you find yourself trading on reward assets, you exactly know what you are doing, because reward assets are fashionable and they are more important in the market. Now, have you understood the reason backing some of these assets? And that is the purpose of reward what assets, right? So if you happen to be a spot trader and you just want to trade, you wouldn't just be chasing coin because it is pumping, right? Because you saw a coin pumping, then you trade on it. No, that is not how we behave as traders. So a trader who has gone on advance focuses on the purpose of the assets rather than how money is being flow, right? So reward assets. Then we also have what we call the American coins. Let me see. Mostly the I get oversight of them. Where do I even find them? So now I don't know. Made in China coins. Mm, okay, this is made in America. Okay, so we also have the made in America coins like Solana, SRP. Now, some of these assets are also real world assets. Though not all may be real world assets, but some of them are real world assets at the same time. Why made in America coins? You know, the US happens to find themselves to be in parts of the world where they mostly fancy the digital space, and they always want to champion digital space. Their trust and belief in the crypto space is also so huge and lovely as compared to other world or other countries, right? As compared to other countries, you may realize that US have got passion for crypto from their president to their subordinates, right? So anytime they make good decisions, most often they make good decisions about the crypto market, which mostly affects their American coins. And they always want to do that to ensure US will progress very fast, right? So if you're a sport trader and you want to trade, you wouldn't just jump in trading, right? But you rather take your time to search for some of these American coins to do what? To trade them. Now the next thing is, going on advance as a spot trader, you you must get a list of coins to trade. You must get list of coins to do or to trade all the time. That is also another way of going on advance, which simply means if those coins are not performing, you are not trading. You must study to know their nature. Hmm? You must study to know the nature of such coin, right? Before you embark on trading on them. Even if it's just one coin, let's say it's AVAX that you love trading, you have to study the chemistry of the coin. You have to take your time to study the chemistry of the coin, the nature, its behavior, how it reacts before you start to do or to trade. So there is nothing wrong with trading just a coin, and having that decision of trading on a coin simply means you have studied the chemistry behind the coin, right? Mind you, this is an advanced session. So how do you do that? So for instance, if it is AVAX that you prefer trading AVAX, you need to take your time to always find various communities, areas, angles where you may get knowledge about what about this particular coin called AVAX. You have to do what we call on-chain analysis, right? Sentimental analysis, fundamental, and every part of analysis you have to do on such a coin every day before you back on trading on them, trading on such particular assets. And when you do that, this makes you an effective trader, right? You become an effective trader because you always know what you are doing and you know the behavior of the asset, right? That is what makes you a good trader. So we talk about AVAX. They said join the tokenized wave. CMB International partners with BNB Chain to expand on-chain distribution of its USD. This collaboration marks another big leap rate, blah blah blah, reward asset adoption, bringing traditional finance and DeFi for a smarter, faster, and then transparent financial. So that is someone's take on AVAX. What do you want to say? And his enthusiast with AVAX, right? So at the end of the day, if you happen to be a trader, the easiest way to go on advance in the market is by first learning the chemistry of a particular asset or a group of assets, knowing their nature, and then also trading them with passion. So can't you see sometimes when you go to TikTok, they ask, what is your favorite cryptocurrency asset? Yes, people have favorites. They have favorites because they always know the nature of the asset that they are trading, right? Yes, it's being recorded. They always know the nature of the asset they are trading. So you take your time. If it is AVAX, you do what we called on-chain analysis. On-chain analysis, fundamental analysis, your tech. That should even be the last thing. That should even be the last thing. Then the sentimental. So if you are a fan of AVAX, as an example, I'm only using this as an example. If you're a fan of AVAX, you should belong to every community. AVAX, you should belong to every community of AVAX, right? So maybe let's see something. So maybe this is AVAX. Okay, you are a fan of AVAX. Now let's scroll down. So let's see community. Community. So let me see. So there are so many community here that maybe you prefer. I think scrolling down to the end. All right, let me see. Maybe there is a place that you very good, very good. So you see the community that you can belong to. We have various communities on AVAX. So you see, if you've not started this, you've not started being a trader yet. You have not started going on an advance, right? So we have Twitter, Telegram, Reddit, Facebook. They've even added Facebook to it. Oh, it seems of late crypto is now starting to they've started recognizing Facebook. Initially, Facebook was not part of their this thing, right? So you belong to all these communities. You learn from all their communities. You get information from all the communities of such particular assets. So to you, to trade simply means AVAX. Anytime you talk about trade, all you know is AVAX, and there are traders like that. That's the reason why most people love BTC, because all they know, they spend their lifetime on BTC, learning everything about BTC. That is called trading. So to be a spot trader, there is nothing wrong with being a spot trader. But being a spot trader without knowledge about sport, effective knowledge or advanced knowledge about sport trading will deteriorate you a lot, because you always want to trade, and the major problem is all you want is money, right? So this advanced lesson would help you to get a perspective mindset where you need to know that if you want to be a good spot trader, you can remain profitable trader, right? And that is where effective dollar cost averaging would come in. That is where effective dollar cost averaging would come in, because the coin that you are trading, there are people that you said buy the dip, you buy the dip, and then it keeps dipping all the time, and it never rise again. There is no future in that coin, and it keeps you frustrated all the time. Why? It's because you refuse to go on advance, to understand, to learn, and know the nature of what you are doing. So some of you just keep pumping money in a coin. You pump money, you have about $10,000, or let's say $9,000. You've opened margin calls about 99 or 99 plus margin calls on that particular coin, and yet it keeps dumping all the time. Always it goes down, always it goes down, always it goes down, because you never take your time to go and advance studying the chemistry of the coin. Are we learning? Are we learning? Are we learning? Are we learning? Very good. So talk of spot markets, the best thing I could talk about is the coin, because if you are able to trade a good coin, irrespective of the strategy that you apply, you will win. You will be safe. You will be happy. You'll be excited. Your nerves itself will calm for you, right? Your nerves will calm for you, because look, as it stands, there are some coins. If you are trading on them, you don't have peace of mind because you can wake up any time to see delisted. That is the most painful aspect of trading. That is the painful aspect of what of trading. You wake up the next morning, you see delisted, to be delisted. So you see, come here, come here and realize that most of the assets here, look at all these assets. Hmm? Look at all these assets. Look at it. Oh, hope you can see. Look at it. Look at all these assets here. Just take a look at it, right? So look, look here. You see all these assets to be delisted, right? Now I know some of you are already trading on them. Some of you fell victim of them already, right? You've fallen victim of them and they are already going to be delisted. Maybe your money stuck in it. Yeah, you are thinking of how to make the next decision. That is not a big deal. But this is the time for you to take your trading journey to another level, right? This is the time for you to take your trading journey to another level. So, if you knew enough and if you know good, you would have known what to do best, right? No one ever dreamt that they will wake up one day to just delist these assets just me because they were those assets that were performing. That is the reason why we are saying or we are learning this morning when it comes to spot trading to say that if you wake up and if you want to make good decision of trading on the spot market, the next thing that you have to do is to think of go advanced on the coins to trade. The coins to trade, they matters a lot in the spot market, right? Okay, so talk of spot trading. I'll only talk about the nature, the chemistry of the coin, and then we move. Now, let's get back over here. Not do we only trade on the spot market, but also on the futures market. And the last time, those who joined the beginner session, I take time to explain what you mean by futures trading, and I'm going to go more advanced on this today. Like I said, some of the terms that we know and some of the terms that we find it so confusing and how to apply them, right? Good. Now, when it comes to futures trading, like we said the last time, futures trading is an advanced market. Automatically, when it comes to futures, listen, it's an advanced market as compared to the spot. Futures market is advanced, okay? It's advanced. An advanced market as compared to the spot market. Yet, for you to be able to make profit on the futures market, you must be able to get in-depth knowledge about the futures market and how it works. If you are the type you prefer to trade on your own, as we are always fighting and train everyone to do, right? So trading on the spot and futures market is important, but then the first thing that you have to do is to understand how the spot market works, and then also, sorry, how the futures market works and the nature of the futures market, right? So the last time we said that we trade on what we call the futures perpetual. Hmm? The futures perpetual. And the reason why we call it perpetual is because the perpetual market is a contract market. It's let's see, when we say the word perpetual, that is everlasting, long lasting. Okay. So there are two forms of futures. We have the um perpetual and then also um is it futures expiration. Okay, so one contract market with no expiration and then the other one with expiration. So when it comes to the futures market, the perpetual market has no expiration. When we say expiration, you may see that sometimes when you are trading, some of the assets, let's say on the expiration market, if you are trading on BTC as an example, the contracts can expire with the due date. They will tell you that maybe by 2025, December 2025, the trade must close. If you refuse to close the trade either in profit or in loss during this time, the trade will automatically close, either in loss or in profit. That doesn't mean your stop loss has triggered. No, that is the contracts on expiration. And then we have the perpetual. With the perpetual, if you are trading on BTC, it continues to go in the market. Even if it's 35 years, it can still remain long in the market for 35 years. That is the perpetual market. Now, the futures market is at that you must understand certain chemistries or certain nature of the futures market, certain things which makes the futures market to be so easy, especially what we call margin, leverage, to which I exposed part of them the last time. Position amount, position amount, right? And then also price movement, price movement. Now, the futures market is very easy to trade and also difficult, because if you refuse to understand how the futures market moves, you will always find yourself wanting. It will be a challenge to you. You must understand the relationship between your margin, your leverage, your position amount, and then also how it affects your price movements. Right? So basically, when we talk of margin, in real Q, listen, when we talk of margin, that is the actual money the trader is using in the market. That is your margin amount. The actual money the trader is using to trade is his margin amount. So if you have $1,000 in your futures account and you are using $20 to trade, this $20 becomes your margin. This $20 becomes your margin amount. And mostly, we may talk about this depending on where you find yourself, either cross or isolated, to which we talk about. The profit you make depends on the margin that you've exposed to the market with your position amount. Right? So first I have $20. Okay, I have $20. I've gone for a leverage of 20x. That means my margin times my leverage, which is 20 times 20, would give me how much? 20 times 20 will be how much? Give me the answer. 20 times 20 will be how much? Give me the answer. 20 times 20 will be how much? Give me the answer. 20 times 20 will give you how much? 20 times 20 will give you how much? 400. Very good. Very good. So over here, good. Over here, I know that I'm trading with $400. 400 what? Dollars, right? Now, this $400 is what determines as your position amount. So there are some of you that anytime you wake up, I want to my first buy amount to be 20. So in an actual sense, the first buy amount is your position amount. Your position what? Amount. Position amount. So if you want your first buy amount to be 20, the first thing that you have to do is to think of the leverage to use. Okay? The margin to use, the margin and then the leverage would give you your first buying amount. The margin and your leverage. So if you want, the first thing that I think you should do is to think of the amount to use. And when you think of the amount to use and the leverage to use, that is when you can think of your FBA. Do you understand? Now, I have $20. My actual money is $500. I want to use $20, okay, to trade. If you want to use $20 to trade, it simply means 20 times your leverage, which is L, where L may be maybe 5x. So 20 times 5, 2, 5, 10, that is 100, right? So it simply means you want your FBA to be 100. That is what it means. But sometimes most people get it twisted. They talk about FBA, they neglect the margin and then the leverage. You can never talk about FBA when you don't know your margin and your leverage. And it is the combination of these two that will give you the profit that you want. It is the combination of the margin and the leverage, the multiplication of the margin and the leverage that will give you your first buying amount. And it is the result of your first buying amount that will give you profit. Right? If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Very good. Very good. Let's proceed. Let's proceed. So over here, if you are a trader, a futures trader who wants to make profits, not only must you think of what should be my first buying amount. If you know your first buying amount and you don't know your leverage and your margin amount, then it means you don't know what you are doing. You exactly don't know what you are doing. That is it. Talk of first buying amount, FBA. What gives you your FBA in futures trading is not the same as the spot trading. Pay attention to this. What gives you your FBA in futures trading is not the same as the spot trading. What gives you your FBA? It is your margin times leverage. That is what is going to give you your position amount, which is your FBA. Right? So if I have $20, that is my original money, $20 is my money. If I want to use 10x, 10x is my leverage, right? So in an actual sense, my position amount is going to be 200, which is going to give me 200, right? So in an actual sense, my FBA is $200. So you can't talk of FBA without margin and then leverage. Do you get it? You can never talk about your position amount without knowing your margin and then your leverage to be used. That is the reason why a lot of people calculate even the what do we call it, the margin configuration very wrong. That is the main reason why a lot of people calculate the margin configuration very wrong. Do you know now? Just let me bring out any of this. So okay, this is sports. Let me go back. So you see over here when you come to margin configuration. Now we are not done with what we are doing. I just want you to understand something. When you come to margin configuration, you can see 2, 4, 8. Now, I'm not talking about this particularly. What I'm trying to talk about is that, you see, if you say you want to buy 2 times of your first buying amount, in REOC you will see 200, right? So this 200 that you are seeing is your FBA, your first buying amount, which is your position amount also, your position amount. In an actual sense, this money happens to be $20, just $20. So if you are calculating for this, and you know the money that you have and you know what you are doing, if you come here and you say you want to buy 2 times of this amount, simply you are saying you want to buy 2 times, which is $40. 2 times of 200 is going to be 400, right? It simply you are talking about $40 in your exchange. Meanwhile, maybe you don't have this exact $40 in your exchange. So instead of you thinking of $200 two times, you need to take your time and think of the money that you have in your exchange. So in an actual sense, if you are doing this calculation and you neglect the leverage that you are using, the margin you are using, you may always get things twisted. If you understand that, give me one. I'm still talking about your margin and then your leverage. If you understand that, give me one in the chat. Someone is saying the speed is supersonic. Mm, am I speeding up? Am I speeding up? Am I speeding up? Am I speeding up? All right. Okay. And mind you, you see this class, we are chewing bones, right? We are chewing bones here. So maybe you've still not developed the step of chewing bones. Okay. All right, that is fine. You are too fast. Okay, let me slow down. So at the end of the day, what we are saying is this: your position amount, hmm, your position amount, which is your leverage, or sorry, your first buying amount, really matters in terms of you doing your margin configuration. Because at the end of the day, if you have first buying amount to be 200, so for instance, um where am I? Let's see. For instance, good, if you have this place happens to be let's say this is um 2, let me say 30 23. Okay, let me use 2, which is 480. So you come here, you know that over here you have 480 here. 480 in an actual sense, maybe you are using a leverage of 10. It simply means this particular 480 is just 48, if I'm right. 48. So 48 times 10, right? 48 times 10 will give you 480. 480. 48 times 10 will give you 480, right? So you are using $48. That is the reason why you are seeing 480 here. Now, when you come to your margin configuration and you are doing your calculation, where is it? Your margin configuration and you are doing your calculation. Maybe you chose here, over here, you chose 2. Now, why 2? It simply means 2 times 480, right? That is going to give you how much? 2 times 480 is how much? 2 times 480 is how much? Hmm? 960. 960. That is correct? 960, right? Good. So 960. If you could do the calculation very right, you see it's going to buy 960. So it will increase for you 960, right? But the thing is that it's going to be 48 times 2 in your exchange. 48 times 2, right? 48 times 2. So you think about what is going to increase here, think about what is also going to increase there, both in the exchange and then also in your royal queue. So you understand 960 in addition to your margin call to your first buying amount. That is what is going to be the result you are going to get, right? So mostly what I've realized is a lot of people, they calculate the first buy amount just in effect to what they see on royal queue and neglect what is in their exchange, which is the margin amount. So if you see a trader saying, I want to use $10 as my margin, as my first buying amount, he's never talking about his margin. He neglects the margin and talk about the what you see here. That is what I'm talking about. I'm not talking about something different. What I'm saying is that someone saying he wants to use $10 as his first buying amount may be an error if he never considers the margin amount with the leverage. Because when you say you want to use $10 as a first buy amount, we must come here to see $10. We must come here to see how much $10. We must come here to see $10 here. That is what you are trying to say, as $10 as your first buying amount. But the FBA is equal to your leverage times your margin. That is what is going to give you your FBA. Your margin, your multiple buying ratios, your margin call limit also applies the same. Your leverage times your margin, that is what is going to add up to the value you want. So you never neglect the leverage and then the margin to talk about something new. Always, if it happens so, you would always realize that your profit making will be very low. That is the reason why it doesn't matter the amount of profit you are making. If these things are lost in your journey, in your understanding, in your perspective, the profit you make, it simply means it is not adding up. You could make more than that. You get it? It simply means the profit that you are making is not adding up. It can be better that you can go more than that, because the calculation is not, you are not getting the calculations right. So here, because your leverage, you always neglect the leverage and then the margin whenever you are calculating your margin calls. All right. Hope it's clear. Hope it's clear. We are proceeding. Hope it's clear. Hope it's clear. Hope it's clear. Are you clear now? Is this clear now? Is this clear? Am I here alone? Is it clear? All right. Then let's proceed. Let's proceed. Let's proceed. All right. Okay. Now, your margin amount, you should also understand that if you go for a leverage, for you to be liquidated in trading, the first thing that you need to think of is your margin and then your leverage. For you to be liquidated in trading, the first thing that you need to think of is your margin and then your leverage, right? The higher your leverage, the higher your risk of liquidation, and also the higher your returns. That is one thing about the leverage, because mind you, on the last Monday we said it is a lending. They are borrowing you money, right? The higher your leverage, if you choose a high leverage, you should understand that you will make high returns and then also quick losses, quick loss. High return, quick loss as well. So when it comes to futures trading, you should know that now if it happens that, let's say I choose 20x leverage, someone also choose 15x, another person 10x. What you should know is this. Listen, what you should know is this. The market moves in what you call price movements. Price movements. And when we talk of price movements, that is the minimum value or the minimum price of an asset. So If let's say you are trading on a particular asset, the price increases or decreases within a unit, right? The price increases or decreases within what? Within a unit. So the rate at which that price increases or decreases is what we term it as the what? As the price what? Price movement. Do you get it? The rate at which the price moves, the minimum rate at which the price moves is what we term it as the price movement. So maybe you want to know about how the price moves. Hmm?
But Ima, please, you stop sharing your screen. I don't know if it's intentional.
Oh no. Can you see my screen?
No, okay, yes, we see it now. Thank you.
All right. So over here, if you want to know the price movement of an asset, first you can easily identify it on your Binance, and that is what affects your what we call. So we have the price movements. Okay, I'm coming. Price movements. So assume PV. Now, anytime the price moves very high, let's say 0.1, 0.2, 0.3, or the price goes down 0.1, either plus or minus, plus or minus, plus or minus. Either the price goes down 0.1 or it goes up 0.1. It goes up 0.2 or it goes down 0.2. The person with the higher leverage, if the price increases just 0.1, this person will make profits because he's using 20x. The person with the 10x, the person with the 5x, when the price moves 0.1, this person may still be in loss while this person is in profit. That is what makes the futures trading different from the spot market. So for instance, let's go to Binance. So on Binance, so for instance, let's tap on any of these assets and observe something. When we come here, we have these informations here. Where is it? So we have um price, info, trading data, square, trade X. Okay, so we shall look at them. Now we have info. This is basically for sports traders who want to do fundamental analysis about a coin. Okay, this may help you to know more about the coin that you are trading. Now, click on trading data, right? Click on our trading data. So when you click on trading data, let me see if you see that here. Money flow, the margin data. Let's see if you see that. Or it's not here. Maybe not here. Let me check Square and see. No, this is not what I want. So just okay, maybe let's use futures. So just tap on futures. Now, very good. I think futures is good. So tap on futures, right? Now, I want to tap on futures. Let's use this. So, one tap on futures, very good. Come to countdown. Countdown. So, just click on it here. Very good. Now, when you click on countdown, when you click on countdown, you will see this here. First, I guess tap on the fund rate. Very good. When you tap on the fund rate, you are going to see these things here. Info, right? I guess this was the same thing that I was looking for. Anyway, now do you have info, right? So when you come to info, click on trading rules. On trading rules, we have what we call price movement. Trading rules. So the trade that we've been trading, there are rules governing every single asset, right? There are rules governing every single asset. So on the futures market, that's the reason you said it's a contract. So once you trade on any asset, it means you do agree on every single rule binding the asset. Do you get it? You do agree with every single rule binding the asset. So over here, we have the fund rate. Maybe we talk about it. Then I'm looking for minimum price movement. Minimum what? Price movement. So Merlin, this asset called Mel has a minimum price movement of 0.000. How many zeros? 4, 100. This is the minimum price movement. This means when this asset called Merlin moves 0.001, a trader using leverage makes profit or loses money. That is the meaning of price movement. So for you to lose money on an asset, it depends on the number of times this particular price would move. Look at the actual price. This is the actual price of the asset. And this is the minimum movement. Either it goes up plus or minus this. That is when you make profit. So if someone is using a higher leverage, if someone is using, let's say, 20x, 10x, 15x and stuff, what will benefit the person is this. If the price move just one, if the price move just 0.001, that person would make profit or will lose money. That is the reason why you always need to be careful of the leverage you use. So someone that is using 5x leverage, maybe this particular person, the price needs to move maybe 10 times. So unless this price move 10 times, 0.0001 times 10 before you make just $0.5. But this person by then he has already made $300. Just one movement. Have you seen the difference? So what makes the actual difference in the futures trading is one, the leverage, to the price movement. And that is the reason why in real time, in real trading, or when it comes to advanced trading, even people sit down to calculate the price movement before they are able to select their leverage. To think of, if the price moves, let's say 2, if it moves 2, how much will it affect my leverage? I'm not teaching that calculation, but I'm explaining things to you. So people set up to calculate. Now that I know that the minimum price movement is 0.001, if I am to trade this asset, what leverage should I use? So he is using the leverage based on the price movement, so that if it happens, it moves 0.001, just one of it, he'll be able to make profit or he'll be able to lose some amount of money. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Mm-hmm. Very good. Very good. Now you can proceed. I say no. No. Hmm? Someone saying no. Now, price movements. So, you said no. Now, what we are saying, this is what we are saying. We have margin, leverage, price, position amount, price movement. I've talked about margin, I've talked about leverage, I've talked about position amount. I'm talking about price movement. Now, you have all these three. We are talking, mind you, we are talking about advanced trading, and we are also adding what we call um price movement. Okay, price movement. Okay, when we talk of price movement, that is the minimum value the asset would increase or decrease in value. So if this asset merely would increase, it simply means a minimum increase is 0.0000100, a minimum increase, and a minimum decrease is still 0.0000100. Now, what we are saying is this: either a trader would make profit on a futures market or not, mostly depends on this price movement. So in advanced trading, what traders does is they take their time to calculate if price would move 0.01, how will it affect my leverage to make profits, and how will it affect my leverage to lose, right? So in a case, what we are saying is that we are not talking about the calculation, but what we are saying is that if you are a trader, understanding the price movement also helps you, because you know if the price, if I'm using a higher leverage and the price moves just 0.0001, with my 20x, I'm going to make profits. And also, if it moves 0.001 against me, with my 20x, I'm going to lose, right? So a trader makes profits in the futures market based on how the price moves. If this price can move very faster, you make more profits. If it moves very slow, you make slow profits, and also so on and so forth, right? So at the end of the day, a trader trades in the futures market with fair idea and understand about all these things: price movements, leverage, margin, position amount, and then also what do you call, you get it? So at the end of the day, if you are a futures trader, going on advance simply means understanding the deeper part of the market. The language of the market is important, right? So that is what we mean by price movement. So if the price, someone that is trading with a leverage, and this will give you a caution to know how to use your leverage very well and sensibly, because there are a lot of people that chooses leverage anyhow. So you use 10x, 20x, 5x, 2x. What happened is that this particular price movement is 0.001, right? 0.0000100. Now, let's assume we are all trading on the same assets but using different leverage. This person using 20x, maybe the price is supposed to just move just 1. This person, the price is supposed to move 2. This person, the price is supposed to move 3. But this person, the price is supposed to move 4. So 4 of this would give him the profit he is anticipating. This person, 4 of this would give him 2, would give him the profit he's anticipating. This person, once the price increases 0.001, he is going to make the profit. This person, the price is supposed to move 3 times before he will make profits. That is what we are saying. So real traders understand, or advanced traders continue to learn and understand the price movements before they proceed to make profits or make entries, right? Now, the same way, if the price moves just 0.001, drops a drop of 0.001, this person would lose part of his money, This person will lose part of it, very huge of it. This person will lose less of it. This person will lose less of it. It needs to move 4 before he will feel the heat. This person just 1, then he will feel the heat. You get it? Do you get it? We are moving to other things. Do you get it? Do you get it now? Do you get it now? Very good. Very good. All right. Now we can proceed. All right. Now, if it happens that this person is using, let's say, 1x in the futures market, the minimum leverage is 1x, right? It simply means for him to make more profits, this price must move many times. The price must increase or decrease based on the position many times before he will make even $1. That's the reason we call it leverage. And the last time, those who joined the beginners class, I talk about it on Monday. I talk about it. That's the reason we call it leverage. So you are using less energy to gain more money. Less work, more money. That is the meaning of leverage. Less work, more money, or more results. Less work, more results. Less work, more results. That is leverage. So if you are using $500 with 1x, which is your lowest leverage, this price have to move very, 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 very high before you can be able to make more profits. Just like the sports trading. That is the reason why the spot trading is different. So if someone using leverage is, if the price just increases 1 and he is going to make $1,000 profits, this person, the price is supposed to increase 1,000 times before he will make $1. That is what it means. So for you, the price would have to increase more before you can make more results. That is the idea. All right. Now let's proceed. The next thing that when it comes to futures trading is still the same. Trading without margin calls has its different rule, right? We are talking about price movements. We are not talking about margin calls. Now, let's proceed. Let's proceed quick. This is what we are saying. The next thing is that the next thing that we are talking about is what you call different margins. That is cross margin and then also isolated margin. Cross margin and then isolated margin. Cross margin. I have two more things to talk about, then I'll give you the opportunity to ask your question. Cross margin and then isolated margin, right? Good. Now, these two has been mostly been discussed among traders, shared different views. Which one is the best? Which one is good? And all what I've been saying is that when it comes to trading, what is best for you, and what is good for you alone, right? Your opinion is your opinion. Respect your opinion, respect other people's opinion. Provided your opinion gives you money, that is good. Now, the case of cross and isolated margin should be understood this way. Now, recent. there was what you call liquidation on last week Friday, right? Now those using cross margin, most of them they lost all the money in their accounts. Total money in their accounts got lost. Why? Because when it comes to cross margin, please hold on a minute. Hold on. All right. Sorry. So when it comes to the issue of cross margin, everyone may have got this or experience, especially those who got liquidated recent. They may feel the heat on the concept of cross margin. Now, when you talk of cross margin, this is it. This is the work of cross margin. Cross margin helps to maintain trade. Listen, it helps to do or to maintain or sustain trade in the market. So I've always been giving this illustration. Let's assume you have four different trades in the market. Four trades in the market, right? You have $100. Out of this $100, since there are four different trades, you choose to expose, let's say, $10 each. 10, 10, 10. Basically, you have $60 as position, open position in your account, which is open to all these four trades. Now, under normal circumstance, each trade is dependent, but on isolated margin, sorry, on cross margin, no trade is dependent. They are interdependent. They depend on each other for survival. So if it happens that, let's say, this particular asset, let's say it is okay, I don't want to mention any assets now. So this particular trade, it's out of the market. When we say it's out of the market, that is maybe the price movement has been triggered and it's getting to liquidation. Since the trades are interdependent, it will link up with this particular trade. Now, it simply means these two trades are sharing capital. If it happens, this also gets weak because listen, this is already weak and it is sharing the capital of this. So they are all sharing equal energy. It will involve this trade, it will involve this trade. So all these four trades are now sharing capital with this particular trade to maintain it in the market. If it happens these two trades get weak, these are the only two trades having strength in the market. Should liquidation triggers, because at a point in time you can see maybe this first person has exhausted all their energy and yet it is still exhausting, all the four trades will be out of the market automatically. They will all be terminated equally. So you realize that sometimes you set up a trade and you go, liquidation has triggered, though it's one asset and it has affected all the trades in the market. You'll be like, oh my gosh, what a mess up, I've really messed. Yes, that is the work of cross. It didn't do that because it wanted to do so, but because it wanted to find a way to sustain this $10 trade in the market so that it can also generate profits just as this particular this remaining three trades doing in the market. But because there wasn't enough energy to sustain it. Mind you, before this would happen, this $60 too would have to be part of them. They've already exhausted the $60 in addition. So it simply means when liquidation happens on cross, it exhausts all your funds in the futures account. It exhausts all your funds in the futures account. Is the message home? Is the message home? Do you get it? Do you get it? Let me know if you get it. Someone say we can't hear you.
Hey, we can hear you. I think it's the person's network.
All right. Okay. Now let's proceed. Those saying no. Hope you are not. Mind you, this is an advanced class. Mind you, this is an advanced class. Anyway, we still learn in an advanced class. So let's proceed. Let me go back and explain. Take it one more time. This is the language we are communicating about um, cross margin. This is cross margin. Now, with cross margin, so this is the exact illustration that I will proceed to make. So you have $10, you have $100 that you were exposed to them. You have $100. $40 is exposed to four different trades. $60 is remaining, right, in a trade. Now, what happened to cross margin is that if you have these four trades, they run interdependently, right? They run interdependently. So when we say they run interdependently, you see, this is 10, this is 10, this is 10, this is also 10. If it happens that this particular trade in the market is getting triggered for liquidation, why does the trade get triggered for liquidation? It simply means the price has moved against its to its highest form, right? We talk about price movements just now. So once the price has moved against the trade, it will be wiped out of the market. Now, if it is yet to be wiped, because there are more trade in the market and more funds, it will collaborate with these two different trades, these three different trades, to ensure it drag funds from them or pull funds from them into its trade, right? So in the case of cross margin, all these four trades are using equal funds to trade. They're all using that money. If mind you, since they're all using equal funds, this one keeps draining funds. This one also it's getting exhausted. This one is also getting exhausted. This is also getting exhausted. So mind you, this will automatically become weak since they don't have more energy or more funds to support it to continue the trade. So this $60 would come in the market. They will drag it into the market so it's exhausted. Once this is exhausted, mind you, the next thing that it needs to do is that once capital is exhausted in the market, the next thing that you see is what is liquidation to be triggered. Triggering liquidation. So when liquidation happens, all these four trades will be out, including your $60 capital, making everything, all the $100 will be out. It simply means you've lost $100, not just $40. Though you exposed $40 and it's added the $60 because the $60 also happens to be in your futures account. And since it happens to be in your futures account, it will drain everything in addition so that you wouldn't have anything in your futures account again, right? So whatever money you have in your futures account will go scot-free, right? So this money is part, it's gone, it has been exhausted, and now everything is gone out of the market. just because it wanted to sustain the trade. Mind you, if it able to sustain the trade for you to, you make profits. You will make profits. But if it's not able to do that, then for cross margin, it's gone automatic. All the money is what is gone. Now let's talk about the case of isolated margin. Isolated margin. When it comes to isolated margin, like I said, cross is for sustainability and it works interdependent. Isolated margin work dependently. Dependently. So the same illustration, $100, 10, 10, 10, 10, right? Now this is working independently, um independently, independent, 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 and then also independent. So they depend on themselves. If this one gets exhausted out of the market, liquidation triggers, that's all. If it's exhausted, liquidation trigger, that is all. If it's exhausted, liquidation trigger, that is all. If exhausted, liquidation trigger, that is all. So at the end of the day, for the isolated margin, your $60 balance remains in your account, right? Your $60 balance remains in your account. What goes out of your account is this amount. Hmm? What the $10 you've exposed to the market, that is what goes out of your account. If you get it, give me one in the chat. If it's clear, give me one in the chat. If it's clear, give me one. If it's clear, give me one. If it's clear, give me one. Hmm? If it's clear, give me one. Just trying. All right. Now, let me go over again for the last time. Since you've understood cross margin, isolated margin shouldn't be difficult to understand. Isolated margin shouldn't be difficult to understand. We said cross margin works interdependent, isolated margin works independently. So we gave the same illustration with cross margin and the same this one to 10, 10, right? So if it happens that I am trading on cross margin, profits would be made alone, trade will be sold alone, trade will be sold alone. Now, liquidation too will be triggered independently. So with this, if it happens that the market is going against me, this trade, this capital will be liquidated. If this also gets exhausted, this alone will be liquidated. If this alone will be liquidated. If this is supposed to be in profits, the profit will be, I'll make the profit alone, right? Now, what makes the cross margin to be, for people to be saying the cross margin is the best, is because it uses the capital most often, the extra capital, and it also draws energy to itself. So for instance, on the cross margin, it is using this capital. Since this is exhausted, it will use this capital, so that they can all share capital. But on the isolated margin, the capital is shared alone. If it is $10, $20, this person is using its own $10, this person is also using its own $20, just as the name itself derives, isolated. So at the end of the day, you realize that it is only the $10 that has been exposed to the market to be liquidated, and not all the $40, which is 10, 10, 10 each. That is what we are trying to say. So either which one is the best or which one is the best, they are all best. Depend on what you want. Cross margin would help your trade to be sustained in the markets. for a very long period of time. But if liquidation happens, it will go out with all the trade that you have. An isolated margin would not sustain all, but it will focus on what the mission you have given it to do. And if it makes profit, it's for you. If it loses that funds alone. Let me know if you understand now. Let me know if you understand now. I'm not getting your question. I don't know either you ask a question. All right. We will explain the last part. Which last part are you talking about, my dear? Which last part are you talking about? All right. So I guess this is fair. I guess this is fair. The other things I have to talk about, but then I guess time is far gone. Let me give you the opportunity to ask your question instead. Let me give you opportunity to ask your question. The session is recorded. If God permits, every Thursday we meet to discuss about advanced knowledge in crypto trading, and I believe it is going to be a building block. We can't learn all things in a day. It is going to be a building block. So, if God permits, our next session on advanced session, I'll take time to explain certain things like stop loss, margin calls, also trailing stop loss and other things that makes futures trading to be interesting. Yeah. So on our next advanced session, that is what I'm going to do. So please, today I believe you've gotten part of it and you are not going to get everything in a day. So that is what you need to understand. What if I close one of the trade during cross margin? If it is going to get liquidated and you're able to see it on time and you close it, then so be it. But if you don't see it, then it will affect all the four trades. Yeah. Okay. So this person isolated it, also uses maintaining balance. So when liquidated it, but the English is not English, and please can you come back again? Which is the best according to your experience? Which one gives more profits? There is nothing like which one gives more profits here. It's about which one secures you, which one is okay for you. So they are all best. I use isolated, I use cross margin, depending on what I want to trade. I use isolated, I use cross margin. I use both to trade, depending on what I want to use. Right? How can one know whether you are trading cross or isolated? How can one know either you're trading cross or isolated? Can I sell myself on future trading without me waiting for the robot to drop the profits for me? Yes, of course, you can do that. You can close a trade. Okay. So when it comes to presently, I don't have funds in this particular account. I said I don't have funds in the futures account yet because I've not started trading today. So how to switch between cross and isolated? So if you want to switch between cross and isolated, it is simple. Now, here is it. This is cross. Come here, come here, right? Click on it, click on cross. Cross. Just click on the cross. After clicking on cross, so let's see. We tap on what? We tap on cross. Let me see. We have isolated. We have isolated here. Sorry, cross, and then mm, so we have this is cross margin and then also isolated margin. So if you want to change first, after getting the asset, tap here. Hold on. Tap on this arrow, this small arrow here. Tap on it. Then click on the assets. So let's assume you want to trade BTC. So BTC. then you click here, you click on cross. Then if you want to change it to isolated, you tap on isolated before you proceed to go into your Royal Q account to set up the trade. If not, automatically to remain on cross, or if you have ever traded it on isolated, it will automatically be on isolated. So if you want to trade either cross or isolated, you have to go into your exchange, quickly check it out to know if it is on cross or isolated. Please, hope it's clear. Hope it's clear. Hope it's clear. That is how to change it. Okay. Let me see how to switch. So I guess my question. One of my leaders said it's good to use cross because when market goes in liquidation, because you are in cross, that liquidation delay to reaches your, because in cross it's liquidated you 1,000%, but in isolated it's liquidated you 100%. Tell me the reality. The reality is what we are learning here. The reality is what we are learning. So in all the reason, I've told you the reason why it happens, because it uses all the funds you have, and with the isolated it only focuses on what you've exposed. That is the main reason. Either it will remain long or not. It's because it's using all funds. Right now, maybe you didn't see that. Come here, read it again. Hmm? Read it again. So let me delete this for you. Now they said all cross positions under the same margin assets share the same assets cross margin balance in the event of liquidation. So this is the reason why you are talking about, or the person is talking about 1,000% whatever. It's because all cross position under the same margin share the same assets cross balance. So if you have $10,000 in your account and you have a position of $10, the money that is being used is not just $10, but the margin being shared is affecting your $1,000 balance, right? So when it comes to the use of cross margin is effective because not only is it using this money, but everything that happens to be in the account. That is it. So in a case, it proceeds to tell you that your assets full margin balance along with the remaining open position under the assets may be forfeited. Why are they forfeiting it? It's because it is using everything to maintain you in the market, or to maintain the trade in the market, right? Then you look at cross isolated margin. They said the margin assigned to the position is restricted to a certain amount. So the main reason why one may be 1,000, one may be 100% is because it has been restricted. Isolated margin is restricted. That is the meaning of isolation. It comes with restrictions. If the margin balance falls below the maintenance margin level, the position is liquidated. However, you can add and remove margin at a will under this mode. So the English is already there. It's not something new. Hope it's clear. I guess cross needs more monitoring than isolated. Please, what happens to your funds when a coin is delisted? What happens to your funds when a coin is delisted? Yes, automatically, when a coin is delisted, your funds disappear. Okay? It disappear, you lose it. First, they used to change it into what we call into BNB. If on Binance, they used to change it to BNB. But if you are not fortunate to get that, when a coin is delisted, automatically your funds disappear. You lose that fund. So before, that is the reason they give you time to prepare before it's delisted. So if you refuse to convert that asset into a different asset, then when it's delisted, you lose the fund. If you have $1,000 and that coin is delisted, automatically the $1,000 disappear from your account. Okay. Now, isolated is what I choose. Losing everything on market is not easy. That is your choice, right? Someone also prefer cross. That is the person's choice. So that is the reason why I've always been saying, when you come to my class, I don't teach what is the best, but I teach you everything so that you can make decision out of your best interest, out of your own best interest, right? So what is best for you cannot be described as best for everyone. This is the reason why when nagging traders begins to jump to say, this is the best, so everyone should use this. This is the best in the world. Then I just begin to look at the person, the nose, and I see how intellectually his cap is very low. So what is good for you may not be good for others. That is one thing that you need to understand, right? That is one thing you need to understand. I cannot come here to tell you, oh, everybody should use cross margin because cross margin is good. Use cross margin is good. And the next one you wake up, oh, bam, your money is not in your account. Hey, leader, you said cross margin is the best. Where is my money? Where is my money? You see, then the person using the isolated margin will get the opportunity. Then I said use isolated, and they said no. They said cross is the best. Use isolated. You see, so always teach everything for people to make good decision, because we are human beings and we are capable of making choices, and we will be accountable for every choice we make in life. Are we learning? Are we learning? Are we learning? That is it, right? So at the end of the day, if you want to be a good trader, understand that you have limits, and where your limits end, that is where someone also prefer to go. Do you get it? Maybe you prefer, you wouldn't love to be in too much darkness, but that is where someone prefer to go. Hmm? That is where someone prefer to be. So you leave the person. Where you wouldn't like to go, another person prefer to go there. So just teach everyone, as a leader, just teach everyone what it means to go there. If they feel to go there, that is good for them. If they said no to that, that is their choice. I wouldn't push you wherever you wouldn't love to be. Right. So making money is always a personal decision. So as trading should be a personal decision, your personal conviction. That is the reason why these advanced sessions are important. So as you join the beginner session, you understand. You join the advanced sessions, you learn to understand. Then you make good choices for yourself. So for the sake of time, the session is being recorded, and when it happens that the session becomes so lengthy, people find it so difficult to watch, right? It's not easy to sit up 3 hours watching YouTube video, right? So please, we will end here. On our next session, if God permits, next week Thursday, we still have more sessions on advanced learning to do, especially with stop loss, and then also its corresponding misunderstanding. I'll get back to explain all those things. Then fund rates and other things involved in futures trading, trading stop loss, take profits, advanced take profits. I'll get back to explain all those things to you guys for you to understand and make better decisions about your trading, so that no one will suppress you to tell you use what is preferable for him, because it is what is good for him is also good for you. No, that is not how trading works. So, ladies and gentlemen, I do appreciate your time for being here with us this morning, for learning with us. And I believe with time, our trading journey will be so smooth. We will remain profitable traders, and we will enjoy more results so far as trading is concerned. Let's keep going, let's keep pushing, let's keep learning all the time. And let's be open to learning. Let's give time for learning. Let's create room for learning. It will help us to grow every day. I wish you all the best in your trading journey. So there is no question to ask. We will end here. If God permits, we shall proceed another time next week. God bless you and have a good day. All right. So this is the YouTube channel. You go to YouTube, you watch the videos, like, subscribe, so that in case there is any other information, you may be able to get access to it on time. God bless you and have a good day. Love you all. Bye, 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 bye.
God bless.